Okay, I'm going to attempt to explain how the SBA calculates whether or not you qualify for a refinance of your current mortgage, okay? And this can be a really good deal for a lot of people, particularly if SBA offers a very low interest rate, like 1.25% for 30 years. And you're currently paying, 5 or 6% over 30 years. So SBA uses a spreadsheet to determine qualifications, and I had to write all this down because it is very complicated. At least it was for me. Maybe it's not for others, but it's a math equation, okay? They take your percent of loss versus your home's value, okay? And then based on that, you may qualify for a total refinance or even a portion of your mortgage to refinance. So they use this spreadsheet to see if you meet criteria, if you're eligible for it. They take the fair market value of your home, and if you don't know what that is, you can find that value on your local county tax assessor's website, and it's usually an amount that is way, way less than what your home appraised for when you purchased it. So your actual tax assessor's website will have what your fair market value is on your home. Now, SBA factors in how much did you already receive from insurance. They do not include any depreciation funds that you have not yet received. And then they also factor in how much your total verified losses are. Now, that's a number that SBA decides, and I'll get into that in another video to help you understand how to make sure your verified losses are appropriately accounted for. So they put you through 2 tests for the refinance, okay? The first test is the refinance has to equal the total fair market value of your land and structure. That's test 1. Test 2 is the refinance equals the total fair market value of your land only. Now, one of those has to equal 40% and the other has to equal 50%. I honestly do not know which one is which, but so long as you're over 50% in the long run, with both of them, it doesn't really matter. So, and most people are, especially if they had a whole lot of damage from a presidentially declared disaster. So you take your total verified loss from the SBA, and they will have told you what that amount is. They've already come and inspected your home and everything. You back out, or you minus the insurance proceeds, and then you take that amount and you divide by the fair market value of your home. You will pass the test if you equal 40%. I do believe it's with land home and 50% with land only. Like I said, either way, so long as you're over 50%, you qualify for the refinance. So here's an example, okay? Let's say your total verified loss from a storm, SBA's total verified loss from the storm, let's just say it's $190,000. From that $190,000, you're going to subtract whatever insurance has given you. Do not subtract the depreciation funds that you have not yet received, okay? So let's say insurance sent you a check for $50,000 for real estate only, not personal property. Do not include ALE, personal property, none of that, real estate only. So let's say they sent you a check for $50,000. Your balance that SBA will consider is $140,000, okay? So that balance needs to be divided by your fair market value of your land. Let's say your county tax assessor's website says your fair market value is $100,000. So the 140 divided by the 100,000, okay, that's going to leave you somewhere in the 130% range, okay? So you are so far past the 50% range, you fully qualify. As a matter of fact, insurance could come back and just about pay you fully for your loss, and you still qualify for this refinance, okay? So the only people I can think of that maybe wouldn't qualify for the refinance are people with, very high-end, expensive structures that didn't have a whole lot of damage, if there wasn't a whole lot of damage. If your home is older, like ours, and it was damaged quite a bit, then there should be no reason why you wouldn't qualify for that refinance. It is very difficult to get because SBA just doesn't do it very often. That's not what they're designed to do. They're not a mortgage company, and so they struggle as well. Their own employees struggle with knowing exactly how to do this for you. But that is what we learned. You take your total verified loss, okay, just a quick recap. Total verified loss minus the insurance funds for real estate only, do not include depreciation funds. Okay? Take that number, whatever that number is, and divide it by your fair market value. That's going to give you a percentage. Okay? It may be like 1.3, 1.4, whatever. It's 140% at that point. Okay? So long as your percentage is over 50, then you do qualify for some form of a refinance with SBA. I hope that was as clear as mud.